thank you for joining our national webinar, Access to Capital 101, Funding Options to Start and Grow Your Business. My name is Michaela Burris, and I'm the Ohio Outreach Manager with Small Business Majority. I'm very excited to turn things over to our National Entrepreneurship Outreach Manager, Ria Aguinaldo. Ria, take it away.
Thanks, Michaela. Good afternoon, everyone, and welcome. As Michaela mentioned, our webinar today is called Access to Capital 101, Funding Options to Start and Grow Your Business. We're really excited to bring this information to you today. We have a lot of information to cover in the next hour, so we will go ahead and just jump right into things. Just a note here, this seminar is sponsored by the Sam's Club Giving Program, and so as part of this program, this is a national weekly webinar series that we launched recently at Small Business Majority. We're very, very focused on small business access to capital, bringing you all the information that you need to know as you are navigating through the funding options to start and grow your business. As part of this Access to Capital program, we are also launching regional programs across the country in 8 regions where we have outreach managers to bring localized information for you, to plug you in with local nonprofit lenders, with local programs that you can reach out to and will help you sort of navigate that local landscape. So we'll be talking more about the program and other components of it that we offer, but just wanted to launch that right off the top that in addition to this national webinar series, we also have local outreach managers on the ground if you're interested in checking out in-person events that are in your area. A couple of housekeeping items before we jump into the presentation. As I mentioned, we have lots of information to cover in the hour. I will go over these slides very quickly, so we will make this presentation available to you in the form of the slide deck as well as it is being recorded, so we'll have that, that resource for you at the end of the presentation. There will also be a question and answer portion. Michaela is going to go through the question and answer portion of the ReadyTalk system that we have here. If you're interested in asking a question throughout the presentation, feel free to type in your question in the lower left-hand corner of your screen. There is a chat box. Then we'll go through those and answer some of those at the end of the presentation. All right, just a quick background about our organization, Small Business Majority. We are an education and advocacy organization founded and run by small business owners, and we're actually just celebrating our 10-year anniversary this year. We are national with 11 offices across the country. The outreach managers that we have across the country are very focused on learning from local small business owners, working with business organizations to find out what the top line issues of importance to small businesses are. And we use this information in addition to the research and polling that we do across the country to better drive the education that we provide. I'll talk about the new entrepreneurship program that we recently rolled out that focuses on bringing education and resources to you so that you have a wealth of information to navigate and grow your business. This Access to Capital webinar is just one issue out of a whole host of issues that we work on. We've been very focused on healthcare in the last 10 years. We're now moving also into retirement. We've done a great deal of polling around taxes and workforce benefits for small businesses. So if you're interested in learning more about the options, the issues that we work on, you can visit our website to learn more. The entrepreneurship program that we launched last year, this Access to Capital program is a component of. We focused for this program on bringing the resources that you need to run really a successful business. Core program areas are access to capital, retirement security, healthcare and other workforce benefits, business skills, and technology. So in the next 6 to 9 months, we'll be rolling out more education on each of these options, and really getting to understanding what you need in each of these program areas to support your business. The program activities are both online and in person, so this is obviously an online seminar. We wanted to make sure that we incorporate local and national business groups that are focused on technical assistance. So these entities have the the understanding and the reach to business owners in order for us to make our program, reach very specific types of businesses, and that we're being very collaborative in the education that we're providing. So over the next years, as we're rolling this program out, really want to make sure that we partner with for-profit, nonprofit, and public entities that are involved in the small business space to have a really robust entrepreneurship program. A special focus of the program is on underserved entrepreneurs, women, and minority-owned businesses. The main point to sort of drive home on that focus is we understand that underserved entrepreneurs face very unique challenges in terms of all of these different business issues. In terms of access to capital, women and minorities are very, very underserved, and we want to make sure that we focus on bringing specialized resources, specialized organizations that focus on these populations to bring those underserved communities up into making sure that they can grow as well. And the last note here, we have rolled out a small business access to capital resource portal. This is part of our broader entrepreneurship portal that we launched. So URL is here, and throughout the presentation, we'll talk about funding options to start and grow your business. We'll mention some of the partners that we're working with, and I'll also lead with some external resources from other organizations and other entities where you can learn more. All of that information is provided for you on our resource portal. So please go and check that out at the end of the presentation, and really throughout the next 3 to 6 months as you're considering your funding options. We'll really continue to ramp that up, bring on more information and more partners. Okay, here's a brief snapshot of what we will go over today. I'll talk about some of the background and the research, why access to capital is so important for small businesses, and what's changed. So access to capital has really been a mainstay for growing a successful business. What has changed in the last 10 years, and why is it important for us as an organization to talk about it, to bring that information to you? Key questions to ask when seeking funding, and then we'll go into the funding landscape. So we're bringing together various options that we really believe you all should know about. We'll talk about some pros and cons of each of the different options, and we'll also connect you with information to learn more under each slide. The Small Business Borrower's Bill of Rights is an initiative that have been very active in rolling out. This is a sort of public education campaign, if you will, at this point. We want to make sure that small business owners understand the various questions to ask as they're seeking funding, making sure that given the new alternative landscape, particularly in online lending, which we'll go over, we want to make sure that you have the questions to ask, the information so that you can make an informed decision when considering some of these online options. Resources and tools, and of course a Q&A at the end of the presentation. Okay, now moving on to just a couple of slides here to talk about the big dilemma and why we're here talking about access to capital. So as an advocacy organization, we've done a great deal of research on a wide range of issues. We've done education to small business owners on a wide range of issues as well. Time and time again for us, both on the outreach front as well as the research front, the top line issue that continues to come up is access to capital. So a challenge that small business owners and entrepreneurs are facing are, being able to find the financing, to find the funding to appropriately grow their business. In our polling, 90% of small businesses say that the availability of credit is a problem. So this is really a driver as to why we're providing this information and figuring out how we can, make sure that access to capital is readily available to small business owners. And beyond just the access, also the understanding of what's out there. Okay. Now, small business lending has drastically changed over the last 20 years. While it has remained the importance of capital has remained the same for decades, the types and the means and the ways to go about finding that funding has drastically changed. So it wasn't more than 10 years ago, you can pop into your local bank, you can talk to your banker, and within a couple of weeks to a month, you would have the loan that you needed. Unfortunately, I'm sure that some of you could sort of offer personal experience to this, but times have changed. So what are the issues and why has the landscape changed in terms of small business banking? So here on this slide, you'll see a couple of bullet points that we'll go over. I don't want to go over each in length, but we just wanted to make sure that you have sort of an understanding from a high level point of view as to why banks have shifted from small business bank lending. Small business bank lending is down 20% even since before the Great Recession. Banks are now more risk averse due to the Great Recession, due to strict underwriting standards. They're very sort of conscious of how they're lending now, and so in considering what types of loans they are approving and what types of investments they were making, small business loans are inherently more risky than large business loans. There are a number of reasons as to why that is, but one point that I want to bring up that is sort of a policy in larger financial institutions is the cost of underwriting a loan is the same for a small loan as it is for a large loan. So for a bank, when they're considering the type of loan that they're looking to approve, and they're considering $1 million loan versus say a small business $50,000 or less loan, the cost for that bank to underwrite that loan, to go through that application process, to go through sort of the approval process, it would cost the bank the same. However, in terms of the return on investment, which loan do you think is more profitable for a bank? And of course, it's that $1 million loan. So in the last couple of years, in the last 10 years, banks have shifted more towards those higher value loans, and some have actually completely taken small business lending off the table. So for banks, less than $250,000 is just not a question. It's not even an option for that bank to provide. Okay. The consolidation of community banks is also a big factor in the reduction of bank lending. Since the Great Recession, a lot of the community banks and credit unions have either sort of went under, or they've consolidated, or they were purchased by bigger banks. These entities are very focused on small business and local economic development. So that's another reason why the bigger banks, or the banking to small businesses has reduced. Then the last point here, in talking about the Great Recession, small business owners were hit hard. So now, considering that the foreclosure crisis hit, some small businesses may have lost their homes. Business sales and profits dipped very, very low. Business owners are still continuing to build their footholds in terms of their financials. So suffering from damaged credit scores, suffering from reduced cash flow. In terms of a bank, in terms of looking at that business financial situation, those borrowers are now less creditworthy. And so from just the snapshot of their financial situation, that has really hindered small business owners from getting those necessary bank loans. Okay. With all that being said, the good news is that there are more funding options available today on the market than ever before. We talked about in that previous slide about community banks and credit unions. At one point, those were really the only sort of alternative financing options available to small business owners aside from the banks. But now there are, a whole host of organizations, of funding, of, public, private, and nonprofit sector sort of financing options that are available. And the goal here for this program and for the webinar really is to give you an idea of some of the, key alternative options that are available to you, and to really serve as a starting point for you to look into these options and in the end goal to really get that funding that you need. Here's a snapshot of some sources of funding. This is absolutely not an exclusive list, as there are many others, but we wanted to just give you an idea of the types of funding that's available. We will not cover all of the options in our time today. If you're interested in some of these other types of funding sources, we are working towards ramping up that online resource portal that I mentioned earlier in the presentation. The goal is to provide you with as much information on each of these different funding options as we can. All right. Now, before we jump right into the funding options, wanted to go over some important questions to consider. So the first step, really crucial step in deciding whether or not you need a loan, or even what type of loan you need, first step is to evaluate your business's financial situation. So by answering the following important questions, by truly taking the time to assess your business's financial health, you'll really have a better understanding of the whole picture, and it'll ultimately lead you to the funding that would work best for your business. Also a note here, please be sure to revisit your business plan. If you don't have one, that's a good place to start. So make sure that you, first of all, have a business plan, that you understand where the funding and the funding that you're looking for fits into that business plan in growing your business either for the short term or the long term. Make sure that you really answer these very important questions and tailoring that and linking that to your business plan. And I just wanted to provide a little shout out here for the local, really as part of this Access to Capital program. We are making sure that not just educating you with the options and sort of a higher level overview, but we want you to reach out locally. We want you to have that one-on-one assistance. We want you to use this presentation as sort of a way to start asking questions and a way to start reaching out to entities and business coaches that can help you. So we're partnering with a long list of small business technical assistance centers, nonprofit CDFI, community development financial institutions, business groups that are focused on bringing you that one-on-one mentorship. And so when you're asking yourself these questions, you definitely want to make sure that you visit a local small business development center, a local SCORE chapter, or one of the SBA-backed centers to talk to a business coach, to go over that business plan and to talk about your funding options. That will really help to ensure that you are applying for the type of loan that is best for your business. And oftentimes you may think that you need a loan, but actually what you really just need is proper cash flow management. So these experts can help you to navigate what the particular need is in your business, and they can also help to guide you to the right option. So if you're interested in learning and finding a technical assistance center near you, we have that on our online resource portal, which again I'll provide the link to you at the end of the presentation. And all of our local programs, where we will be partnering with these organizations in our in-person presentations. So you'll have those folks right in the room as we're going through this presentation locally. Okay, so now we're jumping right into the first funding option that we definitely wanted to make sure you all understand. While bank lending is down, community development financial institutions have really helped to fill the void. So a community development financial institution, or a CDFI, is a class of financial institution that is certified by the Treasury Department that typically focuses on a specific geographic region. So these entities are focused on local economic development. Given that they have that regional focus, their whole goal is to really provide investments and to provide funding to improve the local economy as a whole. So for CDFIs, they're not only focused on small businesses, but they're also focused on revitalizing the economy in a more holistic fashion. So some CDFIs also focus on commercial real estate, affordable housing. So just a note to make sure that the CDFI that you're looking, if you were interested in seeking assistance from a CDFI, just want to make sure that they do small business lending, and we definitely have resources to help you navigate a CDFI near you. The way that CDFIs function, they are focused on underserved populations and often very low-income communities. These entities and in these communities, they typically serve borrowers that are ineligible for traditional bank loans. So for a number of the reasons that I mentioned earlier, devalued credit, low cash flow, CDFIs are very focused on providing funding to those underserved populations. CDFIs often also pair loans with mentorship and other technical assistance support. So if you walk into a CDFI, what you can expect is that they will make decisions and will guide you in the way that is the best interest to you and your business. So they will often help navigate the right financing tools for success. They will, offer other local programs or other potential funding options in your region. The idea really for CDFIs is to make sure that you have that, you have the resources, you have the loan in order for them as an organization to grow the local economy. Examples of CDFIs, Axion and Opportunity Fund are two very successful CDFIs. Opportunity Fund is based in California, and there's Axion offices actually across the country. Listed here are just some pros and cons of CDFIs. Because CDFIs raise the funding, so the way that their portfolios work, they raise the capital that they lend or invest through grants from either government entities or banks that are looking to invest in those underserved communities. So the good note there is the pro for small business owners is they have very competitive rates, very much akin to what you would find at a traditional bank. Great for entrepreneurs, again, unable to secure a traditional bank loan. And as I mentioned, CDFIs offer that additional business technical assistance support. Some of the cons, since the application process is oftentimes similar to a bank application, personal collateral and a guarantee are often required. And important to note here, some CDFIs only focus on smaller loans. So given that most small business owners need on an average about $50,000 loans, that is sort of a sweet spot for some CDFIs. And so if you're looking for more, and if you do have the devalued credit, or if you're in a sort of financial hardship, getting a larger value loan that perhaps you might need might not be an option for you at CDFIs. But with that, I do want to note, I don't have it here on the slide, CDFIs also offer microloans, which are loans that are under $50,000, very specific, sometimes as small as a $5,000 loan. So it's important to note if you're looking for that smaller dollar value, under $50,000, you can reach out to a CDFI near you and ask if they have microloans. Opportunity Finance Network we have listed as a resource here. They are national membership organizations of CDFIs across the country. They have a locator function on their website. So if you go to osn.org, click on the locator tool, and you can type in your zip code, and it'll pop up the local CDFIs near you. And again, to note, to plug our regional programs, we will be partnering with CDFIs for all of our regional programs. So at each of the in-person presentations, we'll have at least one CDFI in the room or one CDFI on our resource list for you to reach out to. All right. Now moving on to SBA loans. So the U.S. Small Business Administration, they are the government entity that is focused specifically on small businesses. If you have not heard of the SBA and you are a business owner, an entrepreneur, get to know them. So SBA.gov, they have, advocacy, education programs all geared towards making sure small business owners continue to grow our country. They have a loan guarantee program that helps small businesses who are unable to get loans from traditional banks. So a couple of points to note here on the SBA loan guarantee program. The SBA does not make the loan directly itself. So the way that the loan is administered for the SBA, there are nonprofit lenders, and that include banks and even microlender or CDFI organizations that are the administers the SBA loan. And the way that works, the SBA guarantees a portion of the loan that's made by the lender. So that what that does is that allows lenders to make loans to what would be termed traditionally risky borrowers. So the lender really has to do their due diligence to make sure that that borrower, can afford that loan. And since it is backed by the SBA, lenders are more likely to offer those loans. There are a number of different loan programs in SBA lending. The primary programs are 7A and 504. So 7A is their sort of bread and butter loan, and it really offers competitive rates. There are a number of reasons and uses for 7A loans, and we do have a very robust SBA loan breakdown of the 7A loan and the 504 loan on our website. So take a look at that if you're interested in learning more about those options. And there are also specific programs that are available for disaster relief, export assistance, and if you are a veteran or were in the military, and even if you're as I mentioned before, women and minorities have very specific sort of organizations that serve SBA lending for these business owners. Okay. There's a quick snapshot here of some of the pros and cons. Again, SBA loans, they do have very competitive rates since they are administered through CDFIs and through banks. They're very akin. The interest rates are very akin to traditional banks. In terms of transparency and in terms of understanding, how much you're paying for and what the sort of a clear picture of your terms. For SBA loans, those are, there are no issues to that. So you have longer loan terms. There's a set interest rate. You'll know exactly, your payments. There are no balloon payments, so it's a very sort of trustworthy option to go into. A couple of the cons and challenges that we've heard for small business or for SBA-backed loans, the lengthy application process has been cited as an issue. So since these are, government-backed loans, they require extensive documentation, and you have to make sure that you have your pay stubs and your financials are up to date, that you submit the application with timely financial information, and that all of your all your T's, dotted all the I's, and that it's a application that's ready to go. The challenge there is, again, the documentation and sometimes the length of time that it takes to get that approval. With that said, there is a program called SBA Express that works to alleviate some of those challenges in terms of the time it takes to get the application in and approved, and it shortens that time period and really does expedite it. So important to note that there is an option for an SBA Express program that'll expedite that process. If you're interested in finding an SBA-approved lender near you, there's a tool on their website, so sba.gov/tools/link, and that's a relatively new online resource for you to find a lender near you. You type in some very simple questions, and you would be directed to local lenders near you. There's also an option to have you to get contacted by a local lender. And SBA resource partners, women's business centers, SCORE chapters, and small business development centers. These are entities that are backed partially by the SBA. They are in communities all across the country, and they're focused on bringing technical assistance, on bringing oftentimes loans to you. They have a whole range of small business issues and education that they can bring to you, as well as coaching and counseling and mentorship. So definitely check out SBA's website, and we partner with these entities throughout all of the education that we provide. Okay. Moving on now to community banks and credit unions. I mentioned them a couple of times throughout the presentation, so I just wanted to make sure that you have an understanding of who these smaller, really small business-focused banks and financial institutions are. These entities, community banks and credit unions, really pride themselves on providing personal service and local knowledge to the table in terms of financing. For a community bank and for oftentimes a credit union, their sole focus is to support and to grow the local community. So if you think about really translating that in terms of the funding and the investments that they make in the local community, they're very focused on investments that will be, they're usually the funds that they place into these businesses, they know that that money will stay actually in the local community. So there's a higher likelihood of them making investments with businesses that are right around the corner. Local decision-making in terms of the loans that they offer. There's a commitment to the community, of course, as I mentioned, and also important thing to note is community banks and credit unions have typically lower fees than big banks. And with that said, they also have higher loan approvals than big banks. So here on the slide, big banks in 2014 approved 20% of their small business loan applications, whereas community banks and credit unions much, much higher. And it's really focused on that commitment to the community and making sure that their funding goes right back in terms of growing small businesses. A couple points here. One point to note about credit unions that I do want to mention. In order to get a loan from a credit union, you do have to become a member. So all member organizations or all clients or members of credit unions, they are the only folks that are able to actually apply for the loans. So, for example, if you are a veteran, you might want to look into a federal credit union or a credit union that serves military or veterans. So it's important to note that when you're considering the types of community banks and credit unions that you're looking into, there are specific focuses for each of these entities, and we do have a list here on this slide to find a credit union or a community bank near you. Snapshot here of the pros and cons. Community banks and credit unions, as I mentioned, have very lower interest rates, sometimes lower than big banks. Their loan terms are longer, they're multi-year, and again, the commitment to local community and customer service is a big benefit for small business. Some of the cons here that we do want to mention, long application times again. So since they are an actual they're a regulated institution, they really want to make sure that their application is submitted and that it's very highly reviewed in order to make sure that their investments are going to succeed. They are very highly regulated. So in the first couple of slides, when I mentioned that there's a community bank and credit union sort of consolidation, the community banks and credit unions that are available now, that are still in the market, are highly regulated. So they really want to make sure for the investments that they make and in the loans that they approve that it'll ensure their success as a bank. All right, so let's just move on now to the next option. Now we'll spend the rest of our time on alternative online lending options. And a couple of points to note here. So this is a very, very big topic, very new topic, but very important for small businesses to understand. A new breed of online lending has come to the market to really fill that big gap in lending. So given that banks are not lending to small business owners, and some of the alternative financing options are definitely out there, a big area that is now sort of being filled is through these new online lenders. And so it's really important for us to make sure that we understand who these lenders are, what they offer in terms of bringing new lending into the space, and also, of course, navigating through some of the pros and cons to the new online funding options that are out there. A couple of points to note about online lenders. Online, when you really bring in technology into the fold across really any issue, any challenge that has been out there, what we're finding now for online lending is these new lenders are bringing a couple of things that have been really pros and challenges in terms of small business lending. So bringing speed, bringing quick application processes, bringing convenient and quick approval of delivery of the funding itself. These are some innovative ways that online lenders have started to reinvent and innovate this financing space. Oftentimes, once you turn in the application, a business owner can actually have the funding in their bank account within just a matter of hours to a day. Very different in contrast to applying for a bank, which you'd have to wait several weeks to months in order to get that funding. But with that said, it's very important for us to note that while online lending is innovating the space, there are lots of new options out in the field. Not all online lenders are created equal, and that some entities, some players in the space are now masking very high interest rates. They are not being, clear in their, transparent in their processes, hiding obscure terms. So it's very important for us to understand who these are and how we can tell them apart. A big challenge in alternative online lending is it's very difficult to tell the difference between, a responsible option from, a very dangerous option that might sort of lead your business towards sort of hardship. So what we have down here, small businesses must proceed with caution. Can't underscore that enough. Please be very cautious in how you approach online lending. All right. Now, what we'll do here is there's four different options that are involved with online lending. I'll go over them very quickly. In our Robust 101, we actually go through each of these options, in length, and we talk about pros and cons of each one. What I want to do for this presentation is just give you a snapshot of what each of these lenders are, quick points to note in terms of what to look out for, and hopefully give you an idea of which ones can be responsible options for you and which ones should be last resort or even if an option for you at all. Okay, so we'll start here with online marketplace lending, oftentimes previously called peer-to-peer lending. An important point to note about this space is since it is growing so quickly and innovating, the names of these options oftentimes change. At the moment, they're called online marketplace lenders. The way that the funding is actually provided in this option is small business owners are connected with institutional and individual investors, and the capital is actually obtained via term loan, very similar to a traditional bank loan. So online marketplace loans, they have actually oftentimes been called online term loans because they are, as I mentioned, similar in structure to a bank loan. They have a set period of repayment. They have very set interest rates. All of the fees and the breakdown of the payment and all of the information that you need to know in order to make that payment over that period of time is disclosed. So important to note here that these online marketplace lenders are focused on transparency and pricing and overall process. So what they are doing is they're really just innovating that application process, innovating the way that funding comes to you in terms of speed and convenience. Some of the online lenders that are marketplace lenders listed here: Funding Circle, Lending Club, and Prosper. These are sort of the three entities that are sort of the top of the market right now. An important point to note, though, since I did mention that these options are akin to a traditional bank loan, as a rule of thumb, online lending is more expensive than bank lending. So online options, while they do bring that convenience to you, their term or their interest rates are typically a bit higher than traditional loans or even other alternative loans. So that's a really important point for you all to take away. Moving on to online cash flow lenders. So a few emerging options that are in the market now are very focused on working capital. So these online cash flow lenders, examples here: On Deck, Cabbage, and IOU Central, they're focused on short-term working capital, and they focus on bringing that funding to you, and the way that they look into your finances is through consideration of your cash flow. These types of lenders have come up with new non-traditional underwriting algorithms. That sounds very confusing, but basically what that means is, when you would apply for a bank loan in the past, they would look into they would have specific metrics. So they would look at the time in business, your credit score, your personal score perhaps, and they'd also look into your financial statements and your balance sheet. So for these new online lenders, these online cash flow lenders, they have come up with these new algorithms that for them, it creates their metrics on what they call creditworthy or what they call a sort of an approval. And a lot of these new algorithms incorporate social data. So at times, these entities will look into things like your online sales, or they'll look into your bidding histories on eBay. They'll often look into your customers on Facebook or shipping information on UPS. So it's a more social, sort of holistic view of who you are as a business owner and tying that to your ability to repay. A couple of important points to note here about online cash flow lenders. So they are short-term loans, so 6 to 12 months. These entities are oftentimes very expensive. So the way that the funding is actually distributed for an online cash flow loan, these lenders actually require access to your business bank account. and the way that the funding is collected from you, the way the payment is collected from you, is made by deductions of a fixed amount of a percent of sales on a daily basis. So what that looks like is you would give access to that lender, and they would cite a certain percent of sales on a daily basis in order to pay off that loan. So from an appearance standpoint, you'd see deductions from your bank account on a daily basis. However, as a business owner, you're very, very busy. You might not check your bank statement every day, and you might not really understand as a whole how much those little deductions will result in the bigger picture in terms of the total you're paying off. So what we've seen for these cash flow lenders is very high interest rates. So when actually calculated those deductions on a daily basis, we've seen high interest rates, even as high as 55% up to 100% when really calculated what the interest rate for that is. So a point to note, and what we want to make sure everyone understands is online cash flow loans, while they may be an option for the short term, so if you need to fill a very immediate need, they end up being very expensive. And unfortunately, some of these cash flow lenders do not easily or readily disclose their terms. They're somewhat obscure in the fine lines and potential penalties for prepayment. So we want to make sure that you understand that while these may seem like viable options to you, they're oftentimes very, very expensive, and it's important for you to make sure that you meet with a financial advisor, that you meet with a business coach, perhaps at a CDFI or a technical assistance group, to walk through what that cash flow loan would look like, how the actual payment would be, and definitely calculate that interest rate. Okay. Just a couple more options here that I'll go over. Merchant cash advance. So a merchant cash advance has actually been around for a very long period of time. It is known as credit and receivables financing. It works similar to that of an online cash flow loan in that the way that the funding is actually administered is the payment is made through in exchange for a portion of future credit card or cash sales. So the merchant cash advance provider is not technically a lender, but they're actually a credit card payment processor. So the provider would take, a certain percentage of credit card sales and debit card sales every day until the loan plus a premium is paid back. Again, similar to a cash flow loan, merchant cash advance is a quick option, but very, very expensive. We have, in sort of this industry, merchant cash advances have been called the payday loans of the small business financing world. So we wanted to make sure in this slide we give you some tips. So in considering your funding options, definitely understand that at times you just need to fill that purchase order in order for you to keep this contract, or you need a very quick infusion of cash that you don't currently have. And so with that, there are these new options, these merchant cash advances, these online cash flow loans that could look like viable options. Unfortunately, there are a lot of cases that we've seen in talking to CDFIs and in meeting with these experts that are working directly with business owners, that the way that these lenders have gone about, getting small business owners to the table and signing that, dotted line, has often been through very deceptive and aggressive practices. If you may have experienced in the last, couple of years an influx of emails from some of these, merchant cash advance organizations saying, do you need quick financing? No credit needed, no money down, you'll have your money by the end of the day. the very easy process, sign up now. Unfortunately, these are the sort of irresponsible lenders and entities that are now sort of poaching small business owners to sign up for these very expensive, very dangerous types of financing options. So a couple of points to note there, some keywords that you need to look for. If you're getting an email, if you have an ad that is sent to you that mentions fast cash, no credit score needed, that they don't look into your financial situation at all, that's a red flag. We would say run as fast as you can, but run as fast as you can to a CDFI or to a business coach to see if this is something that's available for you. Another important to note here, proper cash flow planning is highly recommended. So since the nature of these entities are taking percentage of your credit card sales or a percentage of your daily sales every day, you want to make sure that by those percentages being taken out, that doesn't completely sort of deplete your cash flow to grow your business on the daily. Here's a list of some of the merchant cash advance companies here for you. All right. And so it looks like we have just a little bit under 10 minutes left on the webinar, so I will sort of wrap up this presentation with a quick information about our small business bill of rights that we've been into. In talking about merchant cash advances, it really does segue quite nicely into what we've been doing in partnership with organizations across the country to shine light to this issue of predatory lending and online lending, and provide you with the right questions to ask yourself as you're navigating this space. Okay, so I mentioned bank lending being down. There's some figures here to give you some perspective as to the type of loans that small business owners need. Alternative lenders have stepped in to fill the void of small business lending through oftentimes high cost, through short-term online funding options. One point that we really need to make sure that you understand as we're talking about online lending is completely unregulated at this point. So for the last 3 options that I mentioned, these entities that are providing loans to small businesses, that are offering financial solutions for business owners, are unregulated by government entities. So bank loans, CDFIs, community banks and credit unions, SBA-backed loans, those options are regulated by a financial regulator. These online lenders are not. So they're pretty much creating their own rules, and with that point, they oftentimes don't have consumer protections that the sort of traditional alternative options do. So it's really important to note that these are not regulated, and their behaviors and their processes are not regulated either. So we wanted to do something at Small Business Majority in partnership with a group of small business advocates, brokers, lenders, really a coalition that has small business borrowers in mind. We needed to do something in order to push towards accountability in small business financing. And we did so in the form of the Small Business Borrowers Bill of Rights. So what the Bill of Rights is it is a campaign that we started with the hope to find ways to push for accountability in online lending. With the growing concerns and the rise of the predatory small business lending practices, we identified the fundamental financing rights that we believe all small business owners deserve. So it's listed here are the 6 rights that small business owners, the rights that they are really have, that they should have in terms of small business lending, particularly around online lending. So I won't go over all of the options here. I encourage you all to visit the website that goes over each of these different rights, talks about some some things to look out for, and also it talks about the background about the initiative, as well as the key players that started it and other organizations that are supporting it. All right, the Borrower's Bill of Rights checklist that we've put together, since you are now at the point of considering some of these funding options, we wanted to provide an easy checklist for you to make sure that the loan that you're applying for, the organization or the entity that you're seeking funding from, is indeed a responsible option for you. So some quick questions here. What is the interest rate? First of all, before that is it clearly disclosed? What are any upfront fees? Are there any prepayment penalties? What is the full cost of the loan over its lifetime? So in going through each of these questions, you'll be able to find, whether or not it's a responsible option for you, and make sure that it is not one of those predatory options in the online space. The key point to this borrower's checklist is we really wanted to make sure that you have fully assessed your financial situation and that you feel comfortable in making reasonable decisions in the payments and the terms that are disclosed for you in the loan. All right, now we talked about the Responsible Business Lending Coalition. These are the organizations that are brokers, lenders, advocates, credit marketplaces, nonprofit and for-profit, really a collaborative of organizations that helps bring the BBOR, the Borrower's Bill of Rights, to the table. And in terms of gaining support and encouraging participation, we are reaching out to signatories and endorsers. So what that means is, in order for us to create the initiative that will encourage better responsibility in this space, we have encouraged lenders, brokers, and marketplaces, so these entities that are actually providing the loans, providing the services to business owners, to volunteer to stand for these rights and to attest that they will abide by the Borrower's Bill of Rights. So if you go on the website here, responsiblebusinesslending.org, you'll see a list of all of the lenders, all of the signatories and brokers and marketplaces that have volunteered to sign on and in their practices have sort of attested to following responsible lending practices. And endorsers are organizations like nonprofits, like business groups that truly care about business lending and are working towards bringing the BBOR to the forefront and providing more of a platform for us to educate both small business owners, other lenders, and also, government, that this is a big issue and that small business owners should be protected, in a sense, under the BBOR. All right, so with that, I do apologize. I realize that I'm 1 minute into the hour, or 1 minute until time. I do want to leave a couple of minutes for questions. Again, I apologize for going over. If you do have to jump off the line, I completely understand. What I'll go ahead and do is I'll turn it over to Michaela Burris to ask just a couple of the top questions that we have in the queue. And for those of you that have answered or asked questions and we don't get to them, we will be reaching out to you to get those questions answered.
Awesome.
So,
thank you so much, Priya. Yeah, so we'll go ahead and ask just a few questions that we've had come up during today's webinar. The first question being, how do I find my local CDFI? That is a great question. So to find your local community development financial institution, you can, on the slide that we talked about CDFIs, there's a link there to the OFN website, ofn.org. They're a membership organization that has CDFIs across the country. You can also visit our small business access to capital resource portal.
I will put the portal link up right now. So you can see that here, smallbusinessportal.org/capital. That has a list of CDFIs that we're actively working with. So these are entities that are nationwide as well as specific to the 8 regions across the country that we're rolling out local programs. And continue to take a look at that portal. As I mentioned, we will grow that. It will be a very robust list of partners that we have, so keep an eye on that.
Great, awesome. Another question that we have is, what financing options offer the lowest interest rates?
That is a good question. So the financing options that offer the lowest interest rates, of course, for a lot of the questions that when we're talking about financing and the price tag, will have to do with your particular financial institution or financial situation, your credit score, the length of time that you've been in business. But as a rule of thumb for the funding options that we went over, bank loans, so traditional bank loans typically have the lowest rates. Traditional bank loans, and then moving towards community development financial institutions and community banks. These entities usually have the lowest interest rates. And then, as I mentioned during the online portion, the alternative online options are higher in terms of interest rates. So the online term loans or the online marketplace loans, those are more akin to the bank loans. Their interest rates are a bit higher. And then once you talk about merchant cash advance, that's when you go into the very, very exorbitant interest rate.
Awesome.
Shayla, let's just take one more question here. I want to make sure that we're conscious of everyone's time. Let's do one quick question, and then we'll let everyone go.
All right, sounds perfect. So some folks have been asking about weighing whether or not it's worth it to even apply for a bank loan, especially because there are so many newer options. So can you weigh in on whether or not it's even worth it to try for a bank loan, or just start with some of the newer options you mentioned?
Great. That is, so yes, the question to whether or not you should, as a business owner, apply for a bank loan, yes. So we encourage that the first step you take is to apply for a bank loan. Bank loans, since they are regulated, that they have, the lowest sort of interest rates. If you can apply for and successfully get yourself a bank loan, that is usually the best option for you. That being said, if you are, denied at the bank loan, oftentimes you will get directed towards, another option. So we do know that at banks, they could steer you towards a local CDFI if for a reason you were denied a loan. They'll give you either a connection to a CDFI that they work with or information for you to reach out to that CDFI. So with that, again, I do apologize for going over just a couple of minutes, but you went over a lot of great information here, and I hope that you found that this webinar was valuable to you. As we continue to grow our Access to Capital program, both nationally as well as regionally, please check back with us. So we're continuously rolling out this webinar series. We will be doing this presentation as well as bringing on content partners and other national nonprofits that will tailor to very specific areas around financing. So if you have a particular need in your local community, we do definitely, as I mentioned, encourage you to visit your local CDFI or local technical assistance group to find out more. And if you're interested in learning more about our program and where we're rolling it out, please visit our Access to Capital resource portal. And then aside from that, our organization is very focused on advocacy and education. So it helps in our work for us to hear from you. Unrelated to Access to Capital, if there are any other challenges you're facing as a business owner, we want to hear them. So please reach out to me, and I will find the right person at our organization to talk to, connect you with your local outreach manager. The better we can serve you, the better off we are as an organization, as well as growing our local economies through small business. So with that, thank you so much again for coming or for attending our webinar. And please reach out to us. This will conclude our webinar. Thank you. So